Happy Friday. Hello, I'm Kathy.
And I'm Tracy, and we are a husband and wife real estate broker team with John L. Scott in Redmond, Washington.
And you're watching a weekly webcast that happens every Friday called Buying Your Dream Home Today.
And this show is focused on getting you the information you need to feel confident to buy your dream home today.
And the topic today is hot market.
And great loans. Yeah.
Perfect.
Yeah, so what we have is some information that we get from John L. Scott, and it gives us and you some of the information that is really useful.
Are you going to show it?
Yeah, there it is.
There it is. It says, with a huge backlog of buyers, we are virtually sold out of inventory every month. Most new listings on the market are receiving multiple offers, creating premium pricing for sellers.
Like it says, it's a frenzy market.
Frenzy.
And you can see it also showing that there's a shortage of homes for sale, less than a 1 month supply. And that houses are selling within the first, 71% of houses are selling within the first 30 days.
They go quickly, and that's why we have this show now, so you're well educated.
But but as it says there, the loan rates are historically low as well, so that's great news.
You can actually buy a house right now for as much as you're renting.
I wanted to show this next. It's a market snapshot. Got a bunch of numbers on it, but if you focus down, it's actually over the last year. But if you focus down there at the bottom in the middle, this is really about the area that we live in, and
near
the east
Seattle.
side, east side of King County, and it might be different in your area, but here you can see at the bottom the month supply is 0.6 of a month supply. That means that there aren't enough houses getting on the market. So that makes it kind of a frenzy. But let me come back to.
I was showing a client today a house, and by the time I got home, it was already sold.
Yeah.
I mean, it's going so fast.
It's pretty exciting.
Yes.
This morning, though, we received in our email a really nice infographic from one of our friends at Priority Lending.
Yes.
And I'll go to that here. So, what we're going to have, our friend at Priority Lending, Kathy is pointing to me and saying I should show this, is Peter Ryu. So let's bring Peter on and start talking to him. So Peter, how are you doing today?
Hello, Peter.
Hi, Tracy. Hi, Kathy. How are you guys?
So
Doing
happy
great.
to have you on today. Thank you so much.
Yeah, it's great
Thanks
to have
for having me.
Yeah, we saw this infographic this morning and thought, hey, this is the perfect thing to have on today, and we'll give you a call. And you were nice enough to do this on such a short notice.
Yeah, it's a pleasure to be on the show with you guys.
Yeah.
Tell us a little bit about yourself.
Well, I'm going on my 13th year as a loan officer. I graduated from the University of Washington with an economics degree, which I feel gives me a little edge versus other loan officers because with my education has helped me kind of watch the market and see how the movement goes with the bond market. So, you mentioned it already, the historically low interest rates, they're low and it's only going to go up.
Yes.
And that's what it's saying in this infographic, right?
Correct.
Give us a little bit of a rundown on what we're actually seeing here. It says buy now, so you don't have to pay more later.
Yes, this was like the perfect graphic to show today too.
Yes, actually, this graphic, this flyer is really meant for is to kind of tell you the difference between a scenario of buying a home now versus buying a home next year. So the drawbacks of waiting a year. So a lot of common misconception is you need to have 20% down for down payment, but that's not necessarily true. Although it is best practice, there are many different loan programs out there that require less than 20% down. So this flyer that you guys have, it really is to illustrate the difference of buying now versus a year from now. So there'll be two things working against you if you decide to wait a whole year. Number one is the housing market. As you mentioned before, there is a shortage of supply. And so with the shortage of supply, it is truly a seller's market. So house prices are going up significantly. I mean, there's some areas, I believe in Bellevue and that's 12 to 14%, which is kind of scary. It's almost as much as back in 07.
12 to 14%. Oh man.
Yeah. So you're seeing these huge appreciation in homes. Also, to add to that is interest rates. Now, everyone that follows the news, they know that the Feds are going to hike rates up, and it's just a matter of when. And so they've kind of they kind of held on to keeping the rates low just because of the economy, but it will go up, and it is supposed to go up this year. And actually, with the most recent economic news this past week, there's already been a hike in interest rates. So
I know the jobs market, everything looked good today.
Right. And so again, the home appreciation. So this one illustrates about a 12% increase in a home appreciation. Also, it's very well known that interest rates are going to be in the 5% next year. So you'll see right now is currently, for conventionals anywhere around 4% to 4.125. Next year, maybe even actually end of this year is going to be 5%. Excuse me. So there's two things working against you. This talks about how much your payments are going to go up, how much the minimum down payment requirement is also going to go up. So many factors that are going to come into play if you decide to wait a year to buy.
So I like how it has the sale price is $200,000 on the graphic. It has a 3.5% down payment of $7,000. Can we have the graphic back up there? Oh. And 30-year FHA fixed rate. What?
I got to do my job.
Oh, right. Yeah, you have to do your job there. 4.125. Is that as of today? Do you think that's close to what the interest rate is?
Rates are going to be. Rates fluctuate daily, and that's one of the things a lot of consumers don't understand is, excuse me, the interest rates sometimes change a couple times a day, and so this is just a snapshot market of when our marketing team made this flyer. Okay. But yeah, for FHA, the minimum requirement is 3.5% down. With other programs, conventional, they just changed the rule in January. We can put as little as 3% down. Wow. And then there's also in Washington State, there's a bond program where, with down payment assistance, there's actually zero down programs as well.
Well, see, and that shows too, to me, if I was renting, all I'd have to come up with, I shouldn't say down, all I have to come up with, if I'm buying a new car or whatever, I could buy, I could buy a house with a down payment of 7% and have a house payment of $947.32 today. Owning a house and paying less than I probably am paying rent we live in King County. So it would probably be a lot less. All I'd have to do is not buy that car and put it down on the house.
Now,
yeah, actually, Kathy, you make another great point. With the home prices going up, the rental market has actually really gone up as well. So okay. There's a lot of cases where actually renting will cost more than buying a home. So it's pretty interesting.
I think so too. And then, next year, as you show, buying a home is going to be, since I just mentioned, $7,000 to put down for 3.5% down on $200,000. Actually, the house price goes up too because of the frenzy. It goes to $224 for next year. And then 3.5 is $7,800 down with a 5% loan. It's still low. It's still $1,178. It's probably still less than your rent right now, but it's a huge difference.
Although we do have to consider that here in the area that the prices might be a little bit higher than $200,000 or $224,000. So if it's higher, you just kind of, let's say if you were in a $400,000 market, you'd kind of double these numbers.
Yeah, that's true.
Yeah, and another point that is really great to make, or I should point out, is With conventional loans, you can put as little as 5% down. There's some with 3% down, but there's income caps. But with a 5% down conventional loan, you can go up to $417,000 loan amount, and you get something called mortgage insurance. And now mortgage insurance, for those of you who don't know, is if you don't put 20% down, you're required to pay mortgage insurance. And with conventional loans, as soon as you hit 20% equity in the home, that mortgage insurance goes away. So if you think about it, if you buy now with only 5% down, with the appreciation of, let's say, 7% or 8%, I would say is pretty safe in most King County areas, you can actually get rid of your mortgage insurance in a few years.
That is key right there. You just hit a wonderful subject right there. Mortgage insurance. Can you just say a little bit about that too? Why would people need that?
Yeah. So so mortgage insurance is required whenever you don't put 20% down. Mortgage insurance is really meant for the lenders because they're taking a larger risk with a lower down payment, and so consumers are required to pay. You'll hear private mortgage insurance or mortgage insurance premium. So with conventional and FHA, they're all a little bit different as far as how much they charge. It's based off of credit score, loan amounts, and those things. But if you don't put 20% down, you do have to pay mortgage insurance. But with the market the way it is, I don't see why not paying mortgage insurance now versus if you wait, that's going to make it that much harder for you to buy a home in the future.
That is a great point. Thank you for that.
Mm-hmm.
Great point. So let's look at a little bit more about down payments. What's 3.5%? Is that what we have here on the graphic?
Yes.
Yes. With FHA, FHA requires a minimum of 3.5% down. FHA actually just increased their King County loan limits. Last year it was $507,000. This year it went up to $517,500. So someone can get into a $500,000 house with only 3.5% down.
Wow.
Yeah, and so it's a great program. It's a great program. I mean, that's what FHA is there for. It's for helping people into homes.
Especially their first time and their dream home, using it. In fact, I was just talking about it today. FHAs are perfect for first-time home buyers.
Yes, FHA is a great program. And I also have, through the Washington State Housing and Finance Commission, we have a down payment assistance program. And I actually teach a workshop once a month where any borrowers just looking to just find out about home ownership and find a little bit more information about getting loans, they could take the class, and what's included in the class is a certificate to get 100% financing towards purchasing a home.
Wow.
Now, how do they find out about that? Because that is, that's wonderful for first-time home buyers.
Well, they can either, they can call me or email me directly. There's also through the Washington State Housing and Finance Commission's website, which I can forward you later. It has some information and some classes. My classes once a month in Issaquah, Washington, and you're required to do a 5-hour class. But we provide lunch and try to make it a fun time.
All for
nice.
All for a home. I think, yes, that is wonderful. And his phone number is at the bottom of the screen there. You can just give him a call or go log into his website, which is, I'm pointing to the screen, but it's actually down below.
But why don't, Peter, why don't you talk about how people can get a hold of you?
So you can email me at pryu@prioritylending.com. Or probably the best way to get a hold of me is calling me on my direct line. Phone number is 206-330-9898.
Very nice. And with this frenzy, the first thing that people need to do is to contact somebody like you too, to start the process to get how much you are supposed to have, how much you can qualify for. We had Patty on earlier, our first episode. Can you just say again what you would help them with if they called you today and they wanted to buy their dream home?
So in the past, a lot of people just started shopping for homes and then decided to find out about their financing later. With this market, that's not possible at all, because a seller, since it's a seller's market again, they're going to require a pre-approval letter. So they want to know exactly how much you can afford, how much you're putting down, and all that information in writing. So for someone that is looking to, even considering buying a home, they should contact someone like myself to get pre-qualified. And so part of the pre-qualification process is taking an application, pulling their credit, and then collecting income and asset documents. And so with that information, the pre-approval letters will be pretty strong. And so now, again, this is a requirement in today's market.
And it's not a hard process. It's pretty easy, and people like you help the first-time home buyer or second or investor, whatever you choose, you help them along the way, and of course we do too.
Yes. We actually have an awesome application process with priority. The old days is you get an application, you sit down with them, and you handwrite an application, which I don't mind doing. I love interaction with people, but nowadays a lot of people like to do things on the internet. So if you go to my website,
yes,
correct, they're busy, they like to do it at their own time. So if you go to my website, www.peterryu.com, there's actually a link to pre-qualify. So once you complete the application and you hit submit at the end, and it'll only take a couple minutes, it's only like seven screens. Once you hit submit, I instantly get a loan application and a full credit report, which I can go over with you and talk to you about the different loan options, give you some pointers on credit and those things.
That's
Amazing.
perfect. Yeah, and to buy that dream home, it just takes 7 clicks and then a few other clicks and maybe going to look at the house. But it's really pretty easy to start, at least.
Yeah. Peter,
Yes.
I know you said before the show that you've got a very busy day today, and
you're helping fund some loans today.
Yes, busy market, busy time for us.
That's wonderful.
Yeah.
So we really appreciate you being on with us today, and with such short notice as well. So thank you very much.
All right, thank you, Tracy. Thank you, Kathy.
Thank
Alrighty.
you. Have
Bye-bye.
a great weekend.
You too.
All right. That was great.
Yeah, every time we do this, every Friday, I hope it helps somebody get to their dream home.
And the greatest part about having our own show is that we can do this first thing in the morning. We can change everything about the show and bring somebody new on because we got that good piece of information.
Yes.
So it was really nice. A lot of fun.
So have a great week, and we will see you again next Friday.
Yes. Thank you, and have a great weekend. Again, have a great weekend.